Morning, it's Vijay here. Welcome to yet another episode of the pre-market commentary. It's Friday, September 6th. Yesterday, the markets did not perform to many people's expectations, and people began to panic because they looked at the Nifty and they said that the Nifty is not going up. So the market is due for a correction. Even the most bullish of the analysts looked for a 1500 point correction coming closer to somewhere 24,700. Now, what we miss sometimes is we miss the woods for the trees, as they say. So we look at one particular tree and say that the wood is good or not good. The woods, I'm talking of the forest. We miss the trees for the forest. So what was the tree which has actually troubled the bullish analysts? That was Reliance. Reliance Industries had its AGM, but it did not perform. Yesterday it fell below 3,000, and so everyone panicked. But just look at the forest. The forest consists of many trees, which have lots of stocks and the indices. Very few people would have probably realized that yesterday there were all time highs on Nifty Junior, CNX 500, mid cap, small cap, and micro cap. We didn't have all time high on Nifty and Bank Nifty. Incidentally, Bank Nifty closed in the green, Nifty closed around 50 points lower. So, can you say that it is a time to sell, or is it a time to buy, or time to stay in the market? It's very, very clear that there is an influential voice on TV or on other social media or voices on these media which are trying to put fear into the minds of people, saying that there will be a huge fall, so better get out and buy only on strength. Now, great investors and great traders will look at particular stocks and then decide whether it is overbought, oversold, entry, and when should one enter. One should when enter. That is very normal, what shall I say, market saying that you should enter when there is gloom and doom, or at least people are spreading gloom and doom, but the prices are not telling you that there is gloom and doom. Clearly, if you go through the stocks yesterday, the advances and declines, and the kind of stocks which have gone up, you will clearly see there is no gloom and doom among the buyers. There are lots of stocks have made all-time highs, 52-week highs, and index like consumer durable index was very, very strong, which is the high price stocks actually like Titan, Voltas, Dixon, and the like. So yesterday the best performing index was the consumer durable index, and they are buying because the festive season is supposed to be will be good. I believe so. The buyers believe so. So I think we should just step away and not get caught in this in Nifty, because how many of us actually trade in the Nifty? I'm not including the option traders. Option traders are trading on the momentum. They are not trading on the underlying strength or weakness of the components of the Nifty. So in such a case, we talk of index and we trade stocks. Should you not be looking at stocks? So I, for one, am extremely bullish in this market, though it looks ridiculously high, though some prices in the indices across the board look ridiculously high. But in any such market, you will find number of good stocks, and there are plenty of good stocks to make a portfolio of even 50 stocks. If you want to pick up 50 good stocks which are reasonably priced, which have got good, what shall I say, good chances of appreciation, then there are such stocks we in our portfolio have picked up, and we are always fully invested. We hardly have anything in cash. We are also invested in gold and silver, especially silver, which I feel I keep repeating this. Silver is the way to go. Silver is likely to beat the stocks in a 1 year or 18 months time frame. At this point of time, stocks will beat silver and gold, maybe, but in an 18-month time frame, I'm fairly certain, considering the fundamentals of silver and gold, that silver and gold will beat a typical stock portfolio, a typical all stock portfolio. Right now, we have only about 30% in precious metals, but at one point of time, I am aiming to increase it about 70%. Not now, but later. So apart from Nifty being the spoil sport and mostly, I mean, basically Reliance being the spoil sport, look at HDFC Bank, which is again the most hated bank stock, and it is not falling down. Of course, it is not rising. So people who are day trading will are thinking that they are not making any money out of it. But if you step back and say, okay, I'll wait for it for say 3 months, then I think things may be different. I'm not recommending HDFC Bank. I am not a SEBI registered advisor, but I'm saying look at it in perspective. After all, what are we coming here for in the stock market? We are coming here to make money. So, does it matter at all that you should make money on a daily basis or should you make money on a regular basis? I believe making money on a regular basis is the way to go because, after all, if you're working in a company, you get your salary once a month, right? So, why are you expecting the market to give you profits every single day? If you look at your monthly portfolio performance, then you know you should then analyze whether you're in the right business, right stocks. So that is as far as how you are trading. I'm seeing all around me a lot of people who are extremely short term, looking at an hourly basis and trying to say, I didn't make money today, I lost money here. My experience of 33 years says that whenever I have tried to do this, I have also done that. Whenever I've tried to do that, I have only got headaches and I've lost money. I am not in a state now to get further headaches and lose money. So I'm looking at it from slightly a longer time frame. When I say longer time frame, it's just about 3 months. It's not that I'm looking for 3 years. I think things will be much better in the next 3 months and next 3 weeks, next 3 days. I don't know, but next 3 weeks, 3 months, certainly 3 months, I certainly am very confident. 3 weeks, moderately confident. 3 days, I don't know. 3 hours, I will not trade it also. Even if I'm a day trader, I will trade with where I am going to get less loss rather than maximum profit. In day trading, you're supposed to be looking at less loss or surviving the day rather than looking at maximum profits because it's extremely difficult, if not impossible, to time the market on a hourly basis. So, having said that, I am requesting people to just step back. Probably this is one of those sweet spots in the market for the next 3 months to make some reasonably good money, and it will be worthwhile. It will be worth remembering the way the market is going. I have already talked of a parabola kind of scenario emanating in the market in the next few months. I still stand by that, and the more and more the price action I see gives me that confidence that almost certainly nothing is certain in the market. Almost certainly we will get a parabola in the next 3 to 6 months, say maybe latest by the budget of 2025. Look at things which are helping us to get into that parabolic mode. You look at the US 10-year yield. Yesterday, for instance, is the first time in more than 14 months, it's a 14-month low. So when US 10-year yields are low, it only means that the Fed will get hyperactive. And Fed gets hyperactive, money, whether it flows into US or not, it will flow outside US, and India will be a big beneficiary of this, as history has proven. So I don't want to fight history. I don't want to fight facts. I don't want to get entangled with these arguments about are we very highly priced at 25,000. It won't surprise me if you go to 30,000 in the next 4 or 5 months. Maybe later it may go down to 20,000 or even the 12,000 gang, which is talking of it going to 12,000. But right now, I am unable to see it to go, even if it goes down by another let's say 4 or 5% from here, it is still in a bullish territory. Remember, a parabola is never, smooth. It gives you, it tests you again and again. Over the weekend, I will give you an analysis of the parabolic rise which we had between September 2007 and January 2008, and how difficult it was to be a bull during that time, though the Nifty went up by 37%. Imagine Nifty going up by 37% now would mean it will go to 34,000 by January. It will look foolish to even predict 37% rise, Nifty going to 34,000. But in a parabola, anything can happen. And I also have seen those days where people who were ardent bulls never made money because they put stop losses, and stop losses triggered because the volatility was there. Whenever the move is parabolic, it's extremely volatile. It will test even the hardened bull. So be prepared for that, which will begin now in a few weeks from now and is likely to last for next 4 or 5 months. So that is as far as the US 10-year yield is concerned. Oil has broken 73, and the way it is going, I think, even though OPEC is talking of keeping the supply tight, but unless some black swan event happens, oil seems to be headed down. How much I don't know, but whatever it is, stable oil, stable to downward oil will benefit India, and therefore you can look for the Indian market to catch on to this. Witness the movement in the oil marketing companies. Indian Oil Corporation is what stock we hold. It is having a 6 to 7% yield, and it looked very, very interesting for us even at this stage. Then about ITC, which we hold in our portfolio, that looks good because of the impending spending coming in the festive season. Titan, for instance, is going up simply because the demand for jewelries will increase is expected to increase in the next few months. So we have other precious metal stocks. We don't have Titan for that matter. So yesterday, Dow Jones closed 200 points down. Nasdaq was in the positive because the tech stocks recovered. S&P closed in negative. So there could be a possibility that today the market may open lower and may come down because this evening is the employment data and people will be nervous. So you may have this nervousness for today and for a few days more in the top line stocks in India, especially Nifty and even in Bank Nifty. I am not too concerned about it because whatever I am able to see, I am not seeing any great danger. Of course, a danger can come from a black swan event that nobody can be prepared. But right now, my money is on buying rather than short selling. So, whatever you do, I hope you are successful. Thank you for joining. It's Vijay here, signing off.